Very good morning to you. I'm Malcolm Grahamwood, and welcome to another Core Finance TV CEO interview. And this morning I'm absolutely delighted to welcome back Andrew Knott, CEO of Savannah Petroleum. Good morning, Andrew.
Morning, Malcolm.
Great to have you
Good to
back.
see you.
Great to have you back, and in particular we've got lots of exciting things to talk about today. And I'm really pleased that we've managed to get you out of the office and in here straight away. But before we do that, for those people who don't know too much about Savannah Petroleum, would you mind giving us the usual overview of what the company is all about?
Yeah, no problem. So Savannah is an AIM-listed oil and gas company. We have two basic asset packages. We have 50% of the main petroleum basin under license through two PSC areas, R1, R2 and R3, R4, in the West African country of Niger. And then in Nigeria, we announced at the back end of last year that we're acquiring interest in two large producing oil and gas fields and a 20% interest in an infrastructure business. We've been listed now for around 4 years, and one of the key things about the company that differentiates ourselves from many peers is we've always had a very strong institutional investment base, which has put us in a very good position to negotiate the challenges of the last couple of years.
Highly supportive. And I'll bring in at that stage management, because for a company that's come on so quickly, you've got a really strong management team, I know.
Yeah, so the board is packed with experience of doing projects, delivering those projects and making money for the investors. Then underneath that, we've gone through a large process of hiring very, very good people with experience of similar projects in similar regions. So yeah, we've always invested very heavily in trying to make sure we have the operational capability to do what we need to do. And that's borne out by our operations, right?
Yeah.
So it doesn't matter what we've done, acquiring FTG, acquiring seismic drilling wells, it's always come in ahead of time and ahead of budget, which again, I think is quite an important selling point for the business. Yeah.
Now, most important, I would really like to take a look at today's news that you've announced today that you've made an oil discovery at Amdi, which is, you probably get the pronunciation on that, in Niger. Now, this makes 2 out of 2. We'd like 2 from 2 in your drilling program so far. Why don't you give us some details, run us through what's happened with all the facts and figures and everything else, because it looks really exciting to me.
So I think the first thing is really important to put it into context. So we have, as I said before, 50% of the main petroleum basin in Niger under license. That basin has been explored effectively in 2 eras. The first was by the major oil companies, Exxon, Chevron, Conoco, Elf, now Total and Petronas. They drilled 25 wells, they made 5 discoveries. And then in the modern era, and the real big difference in the modern era versus that period of exploration is the use of 3D seismic technology. You've now in a situation where you've had 99 exploration discoveries from the last 129 wells. Okay, 2 of those are obviously ours. And as I said, the key sort of game-changing event is the advent of 3D seismic across a vast swathe of the basin, which has allowed everybody to better understand the main geological plays. So in terms of what works, or what normally works, or the classic play, the banker play, so to speak, is a play called the soccer alternances. It's a relatively shallow horizon, about 1,800 to 2,200 metres typically. Obviously it's deeper the closer you go to the centre of the basin, just because of the geometry of the basin. So the vast majority of the discoveries in the basin have pay there, and within that one formation there's basically 6 different subunits called E0 to E5. And when you drill a well into the alternances, a typical discovery will have pay in 1 or 2 of those subunits. And to be very, very honest, it's pretty difficult to predict which of those subunits will come in, but when you decide what structure you're going to drill, you do a Monte Carlo analysis, and that comes out with what you think. So to put it into that context, we announced last month that we made a discovery. It had pay in 2 of those sub-reservoir units. We've announced a discovery this month, which again has pay in 2 of those reservoir units. The specific, so I guess we're doing what we said we were going to do when we set the business up, which is we're not going to try and reinvent the wheel. We're going to chase the relatively predictable, relatively low risk play in the soccer alternances. And if we have success above or below that, that's great, but that's not the core thing that we're chasing. And then this discovery, so the quality of reservoir is very good. Well, it's good to excellent in terms of technical parlance. The quality of oil is clearly on a light oil gradient from the pressure data, which is consistent with how the other wells in the region look. And the quantity of pay is 22 metres. which is, again, very, very good for the basin. So the discovery is clearly significant, and for those that have got time to read the press release, you'll see the commentary from myself, the commentary from Steve, which provides a lot more details. But the other key thing is it lets us move away from looking at how we're going to develop our acreage in the Agadir River Basin from a conceptual perspective, to we're now able to focus on a specific development in what's called the R3 East area, which is the area around which our first initial wells are. And it also then enables us to get the confidence to focus the remaining drilling campaign or the near-term thoughts around drilling in and around that area to enhance what we can do there. So it's a very significant result for us, and within the company we're all super excited about what that means for the business going forward. It also puts us in a position which gives us options, right? Because with the Seven transaction, we're going to be generating cash flow, but we've always said as well that over the medium term, we were likely to bring in a partner to Niger, and clearly, the more oil you have, the better the deal that we strike when that happens.
And so the R3 East area you mentioned is going to go towards what you might call an early production system. I'm not going to drag you in onto a date yet, obviously, because you don't know, but you're going to be doing a lot of work on that. So you'll try and do that in conjunction with the continuing drilling program.
Yeah. Yep. So in terms of the sort of the news flow, we're now moving on to draw a new well, Kunama 1. Okay, that's a very similar structure to Amdi in terms of potential. That will complete what we have firmly under contract on the rig, but we have 6 further options, and I expect us to update in terms of what we're going to do with these options over the course of the next month or so. We will then also expect to take a testing rig on contract. Right. Because from an economic perspective, you don't need as big a rig. It's much cheaper, more efficient, and effective to use a testing. Exactly. Yeah. And then we will flow test. We'll do a flow test campaign on the discoveries that we have. And then in terms of the work around an early production system, there's the subsurface work that we need to do, there's the facilities work that we need to do, and then there's also the commercial arrangements that we need to put in place. And we've kicked that work off now. We obviously have a pretty strong idea of intuitively what we think is the best way to do it, but there's no substitute for crunching the numbers and doing it properly, which is what we're going to do. And again, within the organisation, we have people that have delivered these sorts of systems in the past, because it's something that we've been talking about for a long time, is the prize here. As I always say, you can find as much of the stuff as you like, but if it doesn't come out of the ground, it isn't worth anything. So it's very, very important that we deliver cash flows from that.
Good. So, and that sort of asks 2 questions. First one, the quick and usual question is, once you develop and you get an early production system, where are you going to sell the oil to? Which has always been a question in this part of the world. After that, I'd like to develop slightly the fact that, you clearly, with 6 options for the rig, you're going to go somewhere. You're obviously not going to tell me now, because it's something you still have to decide amongst the team and so on. And you've still got Kunama 1 to drill as well. So not asking that, but what I'm suggesting is that in the past we've talked about the fact you've got a lot of leads. Yeah. So you might stick into the R3 area for drilling, or you might go somewhere else. But I know you've got a lot of leads. So
maybe I've answered the first one first, the last one first. Sorry, the first one. So, what we've always said is that we see huge geological similarities between the PSC areas that we have and the PSC areas and the neighbouring PSC area, which is proven to be so prolific. From the data set that we have, which is pretty extensive, we have 126 mapped leads and prospects to choose from. Now, within that, the subset that we're focused on for this year is likely to stay around the R3 area, just because it's all around creating a development production type hub. And there are loads of options that we need to look through there. There's whether we use our infrastructure, whether we use other people's infrastructure, and we pay a tariff to access it, etc., etc., etc. But definitely from a resource additions perspective, we're going to focus around R3, I would expect. But there'll be a lot more detail on that over the course of the coming month or so as we firm up those plans.
So just on that one quickly, so if you do farm out a little bit of it and get another partner in there, that would enable upscaling of the situation a bit, or you're pretty much confident you can do what you want on your own anyway, whatever happens?
So look, one of the things about the 7 deals is it brings cash with it.
Right,
So
yeah.
we will have optionality.
Good.
We have optionality. We will have optionality. And clearly, the other thing we've always said is once you get the rig, the
Yeah.
base case intention is you keep it drilling. But
Yeah.
there are other rigs available in the basin, and as and when we've now had a lot of learnings from the first 2 wells, I think towards the back end of this year we'd be willing to take 2 rigs on contract and move the project forward that way.
And and on the where you sell the oil to in the end, is that still up for grabs? You know,
So
2 or
one
3 options still.
So one of the very significant events that's happened this year in Niger is that government approvals were received for the upstream portion of the export development between the main operator there, CNPC, and the government. Within that, there's an expectation that the export solution, the final export solution, will be made in the summer this year. And the choices there, the primary choices there, are to go into northern Nigeria or to link up to the Chad-Cameroon pipeline.
Yeah.
But that's, to be clear, that's for the big kahuna, so to speak. That's
Yeah.
for the 150, 200,000 barrel a day major export development. We expect to participate in that. That said, the short-term focus is whether we can do an early production system, and that is much more likely to involve a trucking type solution. Okay, so that's slightly different. It's slightly to the right-hand side, but there's going. I mean, you have the good thing. One of the good things about this project is you have a major player in the basin who spent a lot of capital in the basin. It's a major infrastructure player, etc., etc., etc. So things like the infrastructure, the logistics, the securities, the learnings from the initial program, that's all in place in the basin, and is being enhanced all the time, and we can benefit from that.
And you have the relationship with CNPC to deliver that,
not just CNPC, Great Wall, BGP, the other various Chinese service companies in country. They know what they're doing, and they've been a fantastic partner for us.
That's fantastic. That's really exciting, and I'm so pleased that I remember going into the old office and looking at the maps of Niger and R3 and everything else. So I'm absolutely delighted, and I'm sure that you're going to get a huge amount of upside from this in the right and proper time. While I've got you here, I'd like to have a quick word about the 7 energy transaction. This was a huge transaction which you announced last year. I remember how much time it took and how many lawyers and everything else. You're getting to the stage now where people are beginning to understand what it's all about, the full cycle nature of the business all the way through and so on. Why don't you give us an update on what's been going on there and how it's all looking
so as we said just now, there's sort of 2 major commercial CPs we need to tick off. I'm hopeful that will happen this month. And then once we've got the transaction completed, it's obviously just a case of delivering on the assets that we're acquiring. And they are big fields. There's ancillary things that can be done in and around them, etc., etc., etc. The sort of integration of the businesses has progressed quite significantly in terms of a human perspective, and then in terms of getting the final legal formalities done. I'm hopeful that the major commercial CPs will all be closed off this month.
Yeah, I know just how long these things take, and it's a value accretive deal. You mentioned earlier in the interview that it's going to hopefully throw off cash because you want to be able to fund some of the other parts of the business and pay a dividend. So, that sounds particularly good with the generation of cash, and not just from the upstream side. You've got a midstream business in there as well, haven't you, which you're going to...
Yeah, and look, the thing about the 7, so what we did was we found a good partner to go with. So we're partnering with Africa Infrastructure Investment Managers, which is the largest and oldest private equity firm in Africa, and private equity infrastructure firm in Africa, sorry. And the intention is that the midstream business will see significant investments, which will hopefully over time significantly increase the gas price realisation that's received in the business, diversify the customer base, and also increase the absolute amount of production that we deliver. And that's really the sort of the rationale for that. There's a very strong industrial opportunity there because the competing source of power in that part of the country is diesel. Diesel's much more expensive by a factor of 3 or 4, and it's also can be
typically
intermittent.
African situation what you need, and you'll produce in excess of 20,000 barrels a day from there, which
and over time that number can go up much more.
Good. So. We're getting towards the end. It always goes. Time goes very quickly indeed. I'd like to know why you think that your investors should be excited about the prospects for Savannah. Give us a couple of minutes on where you'd like it to be in a year's. I always say in a year's time. That's a sort of very rough figure, but you've got some very exciting drilling, and you've got completion of 7 assets to talk us just your plans, your vision.
So I think within a year's time we should have a very clear plan for the monetization of Niger. It is likely that will have included the introduction of a partner. I think the absolute size of the resource base will be of the discovered resource base will be significantly higher than it is today. In Nigeria, the deal will have been completed. I think it will have bedded down, and everything will be operating the way we want it to operate. There's some relatively straightforward ancillary upsides that we'll be chasing in and around the existing asset base, which I would hope we will have done. And then
I'm not going to ask you to run before you can walk, but have you got further acquisitions in your sights?
Look, I think I always say we're long-term greedy, not short-term greedy. I think what we have just now, we have a very good asset package which we want to maximise the value of. So that is really the core focus just now. Small bolt-on things in and around what we've got, that's fine, but the real core focus just now is...
Let's get this sorted out.
Niger's super exciting. What we've got in Nigeria has the potential to be very, very significant for us. So, those are the 2 core things that we want to focus on just now. But
and you're quite excited about macro for Nigeria, aren't you? Still, you seem positive.
Yeah, look, I think in terms of... Everybody will get more excited about the macro for Nigeria when the oil price goes up. But in terms of there's a lot of opportunity there with realistic, what I would describe with people with having increasingly realistic expectations, and historically it's proven to be a very profitable place for investment. I mean, there's a slide in our investor presentation using Wood Mackenzie data which shows the average return is 1.4 times cash you put in versus cash you get out. So I mean it's been a good jurisdiction historically for the international oil and gas industry.
Brilliant. Well, thank you very much for coming in, Andrew. It's been a really good... It's fantastic to see the Niger story really beginning to 2 from 2 now, with another well about to drill, from those of us who watched it from the beginning, but also to see that you're making substantial progress on the 7 acquisition, and we're looking forward to that as well. All of which I should think should mean that the share price should be significantly higher once all that's sorted out than it maybe it is at the moment, but it certainly deserves to be. So thank you very much for coming in.
Thank you, Malcy.
It's been a great pleasure to interview again Andrew Knott, the CEO of Savannah Petroleum. Thank you very much for watching Core Finance TV and Malcolm Grahamwood CEO interviews. Bye now.